It's a real thrill to be in Philadelphia, and I'm very happy to give this introduction now and then interact with Trish as well. So I want to talk about change and central banks, which is an interesting two features to put into the same sentence. But before I begin, let me say a few words about the BIS Innovation Hub. So the Bank for International Settlements, which I'm sure you all know, supports central banks in their pursuit of maintaining monetary and financial stability. And this is done through international cooperation. And the Innovation Hub was created about 5 years ago. And it can be described as a sort of a joint venture between BIS on one hand and the central banks on the other hand, who host our 7 centers. We have 2 in Asia, 4 in Europe. We also have 4. I'll start over. Asia, 2, Europe, 4, and Canada, 1. And then we also have a strategic collaboration with the New York Fed Innovation Center. And we have almost 100 people working together across the world. And the mandate is to explore and follow novel technologies, and when it's suitable, try to develop the relevant public goods for the central banking community. And we do this in quite an intricate way. We collaborate with central banks or groups of central banks or other kind of relevant partners and research technologies and the challenges that we know the central banks are facing. And we typically land our findings in proof of concepts or prototypes. And it's really about demonstrating the art of the possible. And currently, we are quite deep into tokenization and artificial intelligence, but there are also other areas of technology that we find interesting, and we have the mandate to explore. If you think about what we do from a sort of more output perspective, crucial for us is to maintain and also improve the integrity and the safety of the financial system. And we are also not only try to sort of protect the downside risks, but also look into possible improvements to various services that the private sector offers, such as payments. But it's about demonstrating the art of the possible. And I think this is important to repeat, because what to adapt or adopt when it comes to technologies, or what to implement when it comes to the outcomes of our projects, that's not really up to us. It is really up to the authorities in individual countries to decide what to make reality in their jurisdiction. So see us as an early as a speaking partner in the early phases of innovation, but it's really up to others to decide what should be done. But let me take a little bit deeper into these issues around innovation and change. And I think we're a lot of economists here, and those who doesn't have to be, doesn't necessarily is. I think we all know Adam Smith. I think it's a pretty good place to start. But it's an interesting finding. If you read The Wealth of Nations, it's about 250 years old now. He writes about how goods were moved at the time. And the goods were moved through by roads and by shipping. And the big powerhouses of the day back then, one of the big powerhouses, the big techs of the day, you can call it, was canal companies. Because canal companies, they could move things faster, cheaper, and this idea of bringing things through horse and carts was sort of a bit phased out. But 100 years later, after Adam Smith's book, the transport network, and by that also how the industrial capacity of Britain changed, it was completely unrecognizable. It had changed completely. And the reason for why it changed was railways. And the interesting thing was that it was quite a messy interaction between technology and other aspects, changing how railways were used. There were already railways around when Adam Smith was writing, but they were small, they were private, and they were drawn by horses. And he actually didn't even mention that as a possible contender to roads and ships at the time. But over the course of the next 50 years, there was a lot of innovations going on. Steam engines, obviously, making the trains smaller, faster, and more efficient. And it made railways increasingly superior to canals. It following some smaller private railways. The first public railway was actually between Liverpool and Manchester in 1830. And by that time, it was about, I've been told, 125 miles of railways in England. But over the next 40 years, it grew to 13,000 miles. And excuse me for the following pun that my speechwriter put in, but you can say that canals were really dead in the water. So was the change then smooth and predictable, rational, obvious? You think about trains, who could be against trains? It's pretty good stuff. This was actually a really messy story. So let me tell you a few things about this. First of all, it was not just because of technology advances in itself that made the situation, the transport moving from canals to railways. So first of all, financial innovations. It meant that to make investments in railways became easier, but also we know how we humans react when we think about the new exciting thing. We get a little bit carried away. So there was a financial bubble, and that had to be taken care of. There were terrible accidents. So you had to put in early safety regulations to reassure a very skeptical public that this new novel technology called trains were actually something that was safe to travel on. And the competition drove further innovation, but the result was a grossly inefficient network. So the various stakeholders here had to agree on a standardized width of railway gauge. That's pretty important if you want trains to travel across. And it took some time, but the real network effects of railways could then be enhanced. In the end, the standard that was adopted was, I think I'm getting this right, Stephenson's 4 foot 8.5 inches. This was spread across England internationally. I think actually it's being used in this country too. But why am I then telling you this story about railways, what happened in England many hundred years ago? Well, I think I've said this many times beforehand, history has a lot of lessons. But I think also it's a good example of how technology changed and how it sort of changes in a bigger setting. Well, do we then see any parallels to where we are today? Well, important is that railways just didn't sort of win overnight, because initially they were much less efficient than canals. Interestingly also, canal owners, they saw this coming and they put up a lot of resistance. And the economics prize Darren Acemoglu in his book about power and progress that was published, I think, last year, has a fantastic story in his book about how the canal owners sort of ganged up against Stephenson and others around us. So vested interests is not a new feature. Also, investments, I think, played a significant role. Safety regulations, so that people wanted to use it. Obviously, a lot of battles around standards. But importantly, I think the message here is that change driven by technology and innovation, it's not an elegant dance. It takes quite a bit of time. It can be a tussle, it can be a mess, it can be a race. But eventually things usually land and we can harvest the upsides and the value of that. One more closer example to home, it's a really good article published by the New York Fed recently, and that is talking about when securities markets got rid of paper processes in the 60s and 70s. And it's an interesting, great story. The big power players at the time, IBM and Honeywell, they were in the race to develop more powerful computers. And if you've seen old photos from those days, you could see that the papers were piling up everywhere, and it became very incomprehensible to deal with this. And stockbrokers, they were racing one another to use these new novel computers for their own advantages. And interestingly, the winners of this race went on to dominate security markets for decades afterwards, because not only did they manage to make the transition themselves, but they also bought out failing houses that could not operate these computers as well as the winners could. And the digital infrastructure that was created as a result of these tussles in the 1960s and 70s are actually the ones that we use now. Faster and I'm sure safer, but still basically the same principles. And they are also the same infrastructures that we now see experimenting with things like tokenization. And maybe we are on the cusp of a changing system again. So why does central banks need to understand issues around change? Well, almost all industries have regulations of various kinds. It's about ensuring safety, competition, transparency. But finance is a world that has something that sort of planes, trains, and automobiles does not have. And that is central banks. And I think we have sort of all agree that central banks need to care about innovation and change. But let me just give you my views on these things. So first, this is important for monetary analysis reasons. Setting interest rates so that prices are stable, you have to understand what's going on in the economy. And innovation, we know, can have a large impact on how economies operate. And AI is the most recent example, but certainly not the first. Digitalization more broadly has and continue to have fundamental impact on not only how we do our daily lives, but also domestically and in the global economy. I think we are still haven't seen the full consequences of this. So for effective policy making, central banks really need to understand where things are heading. So understanding and follow what's happening in the tech space is important for making sure you make the right calls when it comes to monetary analysis. Central banks also care about innovation because they have an oversight role. And I know this differs in different parts of the world. You can have what sometimes is called full service central banks, which is doing the whole thing from monetary policy to financial stability to market conduct to micro supervision and macro supervision, et cetera, et cetera. And there is also the other example of more sort of distributed and niched institutions. But I would still claim that central banks is interested in the well-being of the financial system, and more or less explicit they have an oversight role. By making supervision for banks and market infrastructure, it's important to understand how technology is being used and the effect of large changes. And financial stability analysis are, we can see, increasingly concerned with how financial and operational risks interact. And obviously, technology is a significant variable in operational risk. So you have to know what's going on there to be able to make the right choices. And third reason for why central banks need to care is that they do not just think. Within their mandate, they also have to act. And in order to deliver monetary policy objectives, they act, as we know, through market operations to make what never needs to happen. And that you need to be on top of how the transmission mechanism work. And central banks want to see safe settlement systems. So that's what they're operating. They offer it by operating payment systems to safely and reliably allow for the private sector to move substantial amount of money every day. Central banks provide notes, banknotes as well, but that's a speech in itself, so I'm going to leave that to the side for the moment. But it is, I think it's clear that central banks are really part of the change. It's not, it can't just stay on the sideline, but it needs to be involved, and it's part of the ecosystem by offering the settlement services. And that is why central banks, I would say, is different from regulators in other parts of the economy. So if things are changing, central banks need to follow and understand and possibly change and adapt as well. How operations should be done, how systems are still doing the job with the highest possible resilience from cyber threats and operational risks. And this is something that I would say gives the sort of central bankers a skin in the game when it comes to technology changes. It also put incentives very clearly in front of everybody that is a decision makers. We often think about trust and money, that is something for granted. If you ask 10 neighbors, do you know where your money is? You would probably get a sort of flickering eyes, and they say, bank, vault, cloud, back office. They don't know. And the reason for why they don't know is that they think that the experts know about this, which is fine. We all happily walk into an airplane not knowing exactly how that works. We trust people that we don't know and that don't know each other, that it will take us from A to B. And I think it's the same with the financial system. We trust, most people trust and engage with it without actually knowing all the details. But trust in money needs to be maintained. And I think, in my view, it's grounded on two things. One is the monetary policy framework, and that it's operationally independent. And the other one is the general notion that there is a competence. They know what they're doing, and they know that with the economy changing, they will change as well. And understanding technology, I would say, is becoming as important as understanding wage formation process, product market competition, inflation expectations processes, and the like of that. So this brings me back to the Innovation Hub. The hub no role is not to try to win anything or to profit on anything. We certainly don't want to tell the private sector how to run their business. The private sector will always know what the customers need and want much better than people like me. But I think the beauty of a society is where you combine those knowledge of the private sector with the knowledge of the public sector and maintain the objectives that is important there: stability, safety, interoperability, compliance, etc., etc. I'm going to close this, but let me just say a few words about how these things also play out internationally. When it comes to central banks, they are actually quite different from each other. If you look at the lineups of mandates, and I've told you before, there are those who are full service and those who are a bit more niche. I've spoken about this as taking the assumption that setting policy and being a central bank is a sort of like a homogeneous group. But they are not, which means that when we try to help and guide central banks' cooperation, we often find that it can be quite difficult because exactly for that reason, mandates differ. The sort of the DNA that central banks have been developed into can be quite different, which is a very exciting, I would say, learning curve for everybody involved. So we typically, in each project that we typically have 1, 2, 3, maybe more central banks involved, and just learning the differences between them and being able to speak about that in a safe space, I think is a hugely beneficial part of doing these projects together. The projects that we do are just a first look at what is possible. We call ourselves, we are in the early phase of an innovation process. Projects are not a commitment that anything we do would be taken to market. It's not even in our mandate. We are not allowed to take anything to market in the way it's been set up. And I think it's also important that some of the questions that we work with, like, is there a good idea to have a retail CBDC? What can we do with tokenization? Is there a good idea to have a digital identification system that can be universal across the world? It's not us to make the call whether that is the right choice or not. That can only be answered politically. But we like to be a part of the conversation if others think we're helpful. And for doing good policy making, you need understanding. And for technology, I think the best way to learn about that is actually to experiment with it and collaborate to join forces and understanding. So I'll stop this with actually a quote from Adam Smith, which is not a very nice thing he said about people like me, because he said the following: "I have never known much good done by those who are affected to trade for the public good." So he wasn't very optimistic about bureaucrats and public sector people. And I can think about that as a sort of eerily far-seeing early version of another person that I highly respect, which was the US President Ronald Reagan, who said that the nine most terrifying words in the language was, "I am from the government and I'm here to help." So let me reflect on that and say that BIS Innovation Hub, we do have a mandate to explore technology. We do have a mandate to develop public goods, demonstrate what is art of the possible, but others ultimately decide what could be changed. The job is to learn. We try to learn. We try to advise to our best of our ability. Sometimes we get ignored. That's fine. Sometimes we get listened to. That's also fine. The important thing is that when change happens, and we are in an exciting time with lots of change, hopefully it happens for the better. Thank you for listening.
So good morning, everyone. Yeah, that's working. Sorry, I want to check and make sure. So it's a pleasure to be back here again. This is one of the most fun things I organize, and I want to thank Jalapa and the Philadelphia Fed for putting on such an excellent conference every year. So I've known Cecilia for quite a number of years. Before she was the head of the BIS Innovation Hub, and indeed was at the Rinksbank. She has a long history of work at the intersection of finance and innovation in the public sector. She chaired the Future of Payments Working Group, for example, at the Committee on Payments and Market Infrastructure at the BIS, and she was also on a technical advisory committee to the European Systemic Risk Council. So it's great to be up here again and to see you again. And so I'm going to start with a few questions. And let me start by saying I absolutely loved your railroad analogy. In particular, your comment that large-scale innovation and technological change nearly always creates, I think this is a quote, a race, a tussle, and a mess along the way. So my question is, what potential messes should central banks, and frankly, anybody in the financial system, whether you're a bank or a fintech or anything else, what should we be, if not worrying about, then at least preparing for?
Thank you. So I don't want to worry you, Trish, but I think it's important to stay have attention on things going on. You can't really plan the future, but you can be prepared. And what we try to bring to the conversation is two things. Secure the downside while sort of exploring the upside. I don't know if that works in the English language, and it might be a bit of a cliche, but as I said, trust in money is something that is easy to take for granted. Most people don't know how it works. Most people don't care because they have other things going on in their life, and they expect experts to know and what they're doing and keep the system going. So it's a huge responsibility in the hands of central bankers, but also ultimately in the hands of legislators. You have to secure against cyber risks. You have to maintain the integrity. Right to privacy while we're still fighting AML is a sort of classic issue. And we also, given that our financial institutions gets more and more techy, if I may use that word, on the public sector side, we also need to, keep up. And I think one of the things we really need to spend more time on is to help supervisors with their technological tools, basically, because the banks want to be able to report things in a new way. and then supervisors has to do the same. And supervisors, I find, they get more and more on their plates, but they usually don't get more and more resources. So we have to find ways to help them to work smarter. And one of the things we did a couple of weeks ago, which I was very proud of, was we did something called a tech sprint, tech sprint. So we invited supervisors, I think we had from 60 countries, and they worked on particular problems in that space. And we had 99 smiling supervisors in a room doing this, and I think that was a great experience, how they collaborated and in completely new ways.
So I want to broaden the question out now just a little bit about, I'm thinking about your comments about standardization and ultimately how you get there, again from the railroad analogy. So I'm wondering if there's an analogy there to where we're sitting today with tokenization and where we may end up. And I'm not asking you to predict where we're going to end up, but do you think that is sort of one of the pieces of this that may end up being a tussle, if not a mess?
You mean tokenization?
Yeah.
Yeah, but that's fine. I mean, there is no, I think there's few sort of linear improvements in our society. What I try to tell to my staff, it's a frustrating thing to do, innovation, by the way. Either you set out, what you set out to do doesn't work, and then you get sort of sniggering comments about that, or what you set out to do actually works, and then there is kind of response, oh, Christ, it works. Now what do we do with this? So it's a sort of damned if you do, damned if you don't situation. But I think what I'm after is this interaction. So you can demonstrate what's possible, but you have to do that in collaboration with the public sector and the private sector. And I think one of the projects that I'm very proud of is something called Project Agora. We got 7 central banks, we got more than 40 private sector financial institutions in as many countries. I think it's as many countries, 7. And it's about exploring, can we build a prototype where we tokenize bank deposits and we settle with central bank money on the same ledger to see, can we make correspondent banking settlement work better? And this is really the who's who in central banks. We got the dollar there, we got the euro there, we got the Mexican peso, and in Europe we have the sterling, Swiss franc, and the euro, and then in Asia we have the Japan and Korean won. So those institutions are there, and then it's an interesting dance back and forth to inform each other of sort of, lines in the sand, what can be moved, what cannot be moved. But it is interaction that is the beauty of it.
Okay. So I have to say, as a former central banker, the differences in central banks across the way they handle this stuff has to be one of the biggest challenges in that project. It just has to be, because domestic payment systems are actually pretty darn different. Is that a good guess?
I'm not saying that is not.
That would be my best guess. So you talked about Project Agora, and I'd be interested if you have another example of one of the things that you have been doing or participating in that would be very helpful. And in particular, the role of the example you gave of Agora is really clear. Why this is so important for central banks, financial market participants, because they settle safe money on all of those things. I'm just wondering if you have another example or two that you'd like to talk about, the things that you're doing that you may not be in the same sphere, but certainly that central banks would care about.
Well, I think one question that often pops up is sort of, well, are we really going to have these innovation people decide what policy is going to look like? And obviously, no. Yeah. Then I hope I've been making that very clear. But what we can bring to the table is hopefully more knowledge. And let me give you another, and that can affect policy making without actually steering the outcome. So we have now a lot of crypto flying around in the world. We have stable coins as part of that world. And one of the projects we call PIX trial is about monitoring the asset side of a stable coin. And obviously that is important to see, okay, are they managed to keep in the parity, and how is this monitored in real time? And Pixtral, I think, is a good example of, we bring to the decision makers information. It's how to monitoring this. Atlas is another, which is crypto markets in general. So we hope to build better market intelligence and better financial stability intelligence, but the decision making at the end is somewhere outside our department.
Okay, can I push back really slightly on that? I mean, the technological choices and innovate can at least limit future policy decisions about what they want to do. So innovation is going to go on. The private sector does that. That's great. But if the technology is such that you're actually limiting a set of policy decisions to, well, we can't pick A or B or C. We really only can pick A or B because the technology that everybody's using already doesn't really support C. Do you see that as a problem? Maybe I'm inventing a problem that doesn't exist.
It could be a problem, but I think we're already living in that world. I mean, the infrastructures we have today has their shortcomings, and policy is not something that is sort of fixed. We're not trying to build the nirvana system here. We just sort of gradually try to address various things that comes, and it is pretty big changes if you think about it. When we were all young, financial services was typically something that you accessed through a bank account. You went into a bank branch, and it was delayed delivery typically, and it was only open office hours, and it catered for domestic needs. But now we want to transact anywhere we want in the world, and we think, okay, here's a mobile phone, I can take that around the world. I can call anyone, text anyone. Why can I not do that with my financial needs? So the appetite has grown quite a bit out there, and finding sort of the right way to cater, perhaps not for all these people's needs, and certainly there are those who we don't want to help, like people with more vicious agendas. But for everybody else, if we can make it better, instant, cross-border, perhaps tokenization can be a part of this. Yeah, let's try.
That's very cool. So one last quick question, because we're almost out of time. You spoke about central banks needing to be really prepared and on top of change. Can you give an example or two of that without naming too many names?
Yeah. Well, first of all, I mean, you already know this. There is an arms race going on out there about cyber protection. So the more unpleasant forces are finding new ways to trick people, to trick system, and so we have to collaborate. And this is really crucial, that we need to collaborate on what is the best practice, and I think you have written about this as well. And here we try to be helpful for all these smaller institutions. BIS is a membership-driven organization. More than 60 central banks. Most of them does not have the resources that the Federal Reserve Board, Federal Reserve System has access to, and other big institutions. So we try to be helpful in that space. So we do Project Raven, for example, which is done in the Nordic Center, is about helping central banks to both monitoring their own cybersecurity, but also how to supervise financial market infrastructures, cybersecurity. Aurora, also coming from the Nordic Center, is about finding networks across institutions to monitor and strike down on AML networks, money laundering networks. We know that the findings now, when we have done sharpen all these regulations, is that every bank, every payment service provider is sort of working in their silos. They are not allowed to collaborate that much. So we're looking at, can we use technology to sort of share data without sharing it, if I may call it that. So yeah, there is a lot of things that needs to be done, but yeah, I think collaboration is the key here. That's how you find knowledge.
Wonderful. Thank you very much. Please join me in thanking Cecilia.